Folks, in these markets, you've got to be diversified. You've got to diversify yourself beyond stocks. So the question is Forex. How do you trade Forex? Is it worth trading Forex? How do you trade Forex without actually trading Forex? Are ETFs better than Forex? There's so much to talk about. We're going to do it in today's video. Let's get into it right now. So, you may be asking yourself, what am I doing to protect my portfolio against stocks crashing? Good question, right? Well, I'm using a strategy with a proven track record of making money. And get this, it has nothing to do with stocks, bonds, the value of my home, or income sources, and more. If you aren't doing this too, then you're playing with fire. You really are. Because a bear market and or a recession is coming. It's just a matter of when. It really is. Click the button below to learn more before it's too late. Don't procrastinate. It's just a matter of time. All right, so a lot of you are asking me, Roger, what's the best way to protect yourself? What's the best way to hedge yourself? How do I diversify? Well, let me explain something to you. When you're trading the stock market, you're trading a very correlated instrument, very correlated asset. Most stocks are correlated to stocks. So one way to either diversify or hedge your portfolio, which is hedging your portfolio is a way of diversifying. You're putting different eggs in the same basket. You know, you ever heard the saying, don't put all your eggs in one basket? So when you're putting different eggs in one basket, long, short, different type of assets, you're diversifying. Whenever you're diversifying, you're taking your risk and you're expanding it sideways as opposed to increasing it. So what happens is your risk is diversified. And that's what you want to do. So the question becomes now, Roger, that's great. So I hear that if I trade currencies, currencies have a negative correlation with the stock market. That means when currencies go up, stocks go down. When stocks go up, currencies go down. I want in. How do I diversify my account with currencies? Do I go to a Forex broker? Do I trade ETFs? A lot of good questions. Let me give you the difference between Forex and currency ETFs so you understand what they are, how to trade them, where to go, what's the best thing for you, okay? So I'll use the FXE, the euro currency, as an example because that's a very, very popular Forex pair with the US and a very popular ETF, very liquid ETF. So Forex currencies is trading the Forex market the way large banks. You're not going to an exchange. You're going to an off-exchange place where everybody meets and the price of the currency, the global currency, fluctuates based on supply and demand. There's no middleman. There's no market maker. You're literally taking it to the world. You're trading it electronically against banks, other market makers, and so forth. The currency market has the most leverage. You cannot get the type of leverage you will get from a ETF that you will get from a currency. So one thing you'll get from a currency is leverage. The problem is you may be getting a little too much leverage. So a lot of times, this is the biggest downfall of Forex, in my opinion. Traders start with a tiny account and they don't realize that the leverage is so big. It's like hundreds of thousands of dollars can be locked in with a tiny account, but that leverage is still there. So one of the biggest upsides or downsides, depending on how you look at it, of Forex is leverage. Liquidity. There's the biggest liquidity in the world is in currencies. Currencies, interest rates, fixed income, and then stocks. So by nature, you're going to get a lot more liquidity, a lot more volume in currency. Doesn't mean that ETFs are not liquid, but Forex has the best liquidity of any market. And there's no short sales rules. You know when you want to sell short a stock unless you want to go inverse, and there's inverse ETFs, but with Forex, you just sell, buy, there's no difference. Also, Forex markets are open around the clock, 24/7. Actually, no, not 24/7, 24 hours a day, 5 days a week. They're closed on Sundays and part of Saturday. So Forex markets are open longer than stock market hours. And there's no real commission in Forex. You pay the difference between the bid and the offer spread. So there's low cost. Now, You may be asking yourself, now why, since Forex has all these advantages, Roger, why would I trade an ETF instead of just going to Forex? Well, let me explain that too. The thing about ETFs is they don't have fixed contract sizes. And a lot of times what you want to do is you want to compare one asset versus the other asset. And when you're trading Forex, it's hard to do because they're fixed contracts. When you're trading stock shares, and ETFs are shares, so you can buy 50 shares, 51 shares, 53 shares, 100 shares. You can fine tune your exposure with your share size very, very evenly when you're trading ETFs, which you cannot do with Forex unless you have a very large account. So with a small account, you'll get more bang for the buck with Forex, but you won't be able to fine tune your account size. That's one advantage of ETFs versus Forex. You can fine tune your account size, your diversification, your risk. It's easier to fine tune it down to a share, and I mean literally to a share. That's number one. The other advantage to ETFs is you could trade your ETFs in your IRA account, in your brokerage account, stock brokerage account. Most investors have a lot more money in their investment account, in their stock account, and they use their Forex account as a speculative account. So, and a lot of traders don't even have a Forex account. So if you don't have a Forex account, and if you don't want to open up an account, you don't want to do paperwork and all that, you could trade ETFs with a stockbroker. Any stockbroker that trades Microsoft, Intel, Nvidia, Tesla, all those stocks, you could trade ETFs. And there's just as many currency ETFs, and you don't have to worry about the short sale rule because you can buy an inverse ETF, which means when it goes up, it means the actual ETF goes down. So there's a lot of ways to work around the shortcomings of ETFs versus Forex, because the truth is commission is really cheap. You've got plenty of market hours, okay? I mean, really, from 6:30 in the morning till 1 p.m. Eastern time, and then you have the night session. Day trading, I don't really day trade, and I wouldn't, because there's just not that much profit potential versus risk. So not much day trading going on. Liquidity, most ETFs have plenty of liquidity, and I mean plenty of liquidity. And leverage, like I said, you don't have that huge leverage that you do have with Forex, but you can fine tune your exposure. In the old days, when you didn't have ETFs, you would take the largest contract, Forex contract, and you would equalize your remaining contracts based on that, because you want equal exposure. You want equal bang for your buck. Now with ETFs, you don't need to do that. That and the fact that you could trade it with the same broker. So if you're hedging yourself, you don't have to look at your Forex brokerage account, and you don't have to look at your stock brokerage account and kind of do manual arithmetic. You can have your hedge in your broker account. Imagine you're losing $100,000 in your brokerage account. You're making $100,000 in your Forex account. Your stockbroker doesn't know that. He's calling you and saying, you have a margin call, you have a margin call. And then you go try explaining to him that your $100,000 that you just lost is in another broker's account. That's not going to help you. So when you have everything in the same account, in the same brokerage, it makes sense. Your risk management can see your downside, they can see your upside, they can see all your equity, they can see your hedge, they'll see what you're doing, and they'll back away from you if that's the case. So the advantage of ETF is you don't have fixed contracts. You can literally fine-tune your exposure down to a share, and that will give you equal bang for the buck when you're gaining and losing. That's what you need as a pro trader. You need equal exposure, and you could trade everything from the same broker. I hope that helps, and I hope that answers the questions between trading Forex or trading ETF currencies via ETF. More and more, when ETFs started out, most traders were still using the Forex. It's shrinking. The same thing that happened with futures brokers when the SPY ETF and all those ETFs that trade the S&P 500 came out. All the futures brokerage traders started moving away from futures and into ETFs, and we're seeing the same thing with Forex. A lot of retail traders like you and I who are trading shares are moving from Forex and into ETFs for that reason, because you could trade everything with one broker and you can fine-tune your exposure, and you still have plenty of liquidity and you still have plenty of leverage and all that other stuff. So you may be asking yourself, how do you amass Forex-sized profits without Forex? Legitimate question, right? Well, tap the button below to learn the strategy that I'm using right now. It has all the upside of Forex and none of the downsides or hurdles of trading it directly. You'll learn how we've used it to lock in profits of 73.7%, 96.2%, and 173.5% in just a matter of 2 weeks. 2 weeks, not 2 years, 2 weeks. I want to help you protect and grow your wealth. So jump on these trades now. The next one's about to go out. Let's do this. Hey everyone, I just wanted to say thank you for watching this video. If you're watching this on YouTube, go ahead and click the subscribe button. We're always posting videos on different trading tactics and what's currently going on in the markets. So make sure you subscribe so you don't miss a thing. If you like what we're covering today, or if you have any questions you want me to address, leave a comment below. If you're on our website, check out more videos and our articles. Again, thank you for watching, and I hope to see you soon. Take care.